The opportunity set in Western Europe and U.S., what is it?
It's significant. Infrastructure has been massively underinvested for decades, and so certainly we're investing in midstream and telecom. They've been our most active areas of investment, but we're also investing in renewables, water, social infrastructure, transportation. It's across the spectrum.
When we talk about the public-private partnership, that's like tolls, that's bridges, that's roads. That's not what you're interested in right now.
Yeah, honestly, public-private partnerships have been less than 5% of the capital that we've invested. We would love to do more, but we're not holding our breath. Most of what we've invested, we invested $4 billion last year of equity capital, and a lot of that went into midstream, telecom, and renewables.
So it's been 6 months you've had this fund, so how much have you been able to allocate?
Over 10%, and if a couple things go right, we'll be at 20% shortly.
So would your opportunity set change if the government tried to help, or is this really totally irrelevant when it comes to how you invest in your strategy?
It's very relevant, and we're grateful that the government is trying to promote infrastructure. It's helpful and gives us a halo effect. If we actually can unlock more PPPs and toll roads and airports, which is really not part of our investment set today, there would be significant growth in the opportunity set.
How do you then understand the macro? So trade risks, geopolitical risks, like how does that feed into the kind of projects you want to invest in?
Yeah, a lot. We have the benefit of typically investing in assets that are existing today with products, assets that are built with products that have already been delivered. So trade risk, tariff risk really doesn't play into a whole lot of what we're investing capital in. It's a lower risk business than typical.
Let's get to the midstream then, because there is a lot of private equity now coming into the pipeline business. What type of deals are interesting to you?
Really two kinds. The first kind is a lot of midstream assets are owned by MLPs today. And so we typically partner with MLPs. There are two things that MLPs need help with. Number one is typically, since they're retail investors, they can only raise $300 or $400 million of capital at a time. So when they want to make a big acquisition or make a big investment, oftentimes they need private capital to help them. And so we do that. The second thing that we do outside of MLPs is we're often investing with oil and gas companies that typically drill for oil and gas, but they don't want to spend the capital to build the pipelines to take that to market. And
you're not alone in that. I mean, it's a really interesting change versus the MLP world, partnering with an oil and gas company, and Blackstone has also been doing that, which leads me to competition. I mean, there is so much money that has poured into this space. What does that mean for you in valuations and finding those opportunities?
Right, competition's actually not been a big issue for us in valuations. So consistently over the last decade, about half of what we do, we're not competing with anybody on. None of our, it's really, we're using our network, relationships, and frankly coming up with creative ideas to find opportunities. So competition hasn't been a big issue. Valuations are high. I would say what's driven that has been historically low interest rates.
Interesting. So I would think that higher interest rates then would make you happy because valuations would come down for you, more to buy?
They would be. It would make my job easier.
So in terms of infrastructure, when I think of infrastructure, I think China, and that's a place that you definitely want to be in to do that. What is the opportunity set in China? How are you positioning for that?
Yeah, it's significant. So today we're mostly investing in North America and Europe, but China and Asia more broadly has 60% of the world's population and 2/3 of economic growth. So if you want to be an infrastructure investor in the next few decades, you need to be in Asia. And so we have the strongest private investment platform in private equity in Asia. We don't have people on the ground today that are focused on infrastructure, but we're taking care of that. And I would say in the next several months, it's a market we're going to actively explore.
What's the hardest thing about trying to operate in Asia?
The hardest thing about China operating in Asia?
No, hardest thing about making an investment in Asia and investment in China when it comes to infrastructure.
Yeah, it's not one market. So if you're looking at Asia, you've got China, which is different from India and Southeast Asia, different very much from Japan and Korea. And so it takes localized knowledge. You can't just take a few infrastructure people and send them to Asia and say, go do it. You need deep embedded knowledge in all the local markets. And I think that's what takes time to build. And we have an advantage because we have an existing business there.